Ever wondered how you can invest in Bitcoin without actually buying it? Welcome to the world of digital currencies, where Bitcoin stands as a trailblazer. Launched back in 2009, Bitcoin has not only revolutionized the way we perceive money, but also opened up new avenues for investment. Now, investing in Bitcoin sounds exciting, right? But it's not as simple as it seems. Buying Bitcoin directly involves complexities. You have to understand blockchain technology, manage digital wallets, and not to mention navigate the high volatility of cryptocurrency markets. And then there's the risk factor. The value of Bitcoin could skyrocket one day and plummet the next, making it a risky investment for the uninitiated. But don't let these challenges deter you. What if I told you there's a more secure, more regulated way to get involved in the Bitcoin market? But what if there was a way to invest in Bitcoin in a more secure and regulated manner? Before we dive into Bitcoin ETFs, let's first understand what an ETF is. An exchange-traded fund, or ETF for short, is a type of investment fund and exchange-traded product. It's designed to track the performance of a specific index, sector, commodity, or asset. Think of it as a basket of different investments that you can buy or sell through a broker, much like you would a single stock. So why are ETFs popular? They offer a way for investors to diversify their portfolios without having to purchase each individual asset. Instead, you're buying a single ETF that represents a broad range of assets. For example, an ETF tracking the S&P 500 gives you exposure to 500 of the largest U.S. companies without having to buy shares in each one. ETFs are known for their transparency. You can see what assets are in the ETF at any given time, and they're also valued throughout the day, so you always know what your investment is worth. But of course, as with any investment, there are risks. The value of an ETF can go down as well as up, depending on the performance of the underlying assets. It's also important to remember that while ETFs allow for diversification, they don't guarantee profit or protect against loss. Another aspect to consider is the ETF's expense ratio. This is a fee that covers the fund's operational costs and is deducted from your investment returns. While ETFs generally have lower expense ratios than mutual funds, it's still a cost you need to account for. Also, keep in mind that not all ETFs are created equal. Some track well-established indexes, while others follow more niche or speculative markets. It's crucial to understand what the ETF tracks and how it fits into your overall investment strategy. Lastly, it's worth noting that ETFs can be traded like stocks. This means you can buy and sell them throughout the trading day at fluctuating prices, unlike mutual funds, which are only traded once a day after the markets close. Now that we understand ETFs, let's see how this concept applies to Bitcoin. A Bitcoin ETF combines the flexibility of ETFs with the potential of Bitcoin investment. You might be wondering, what exactly is a Bitcoin ETF? Well, ETF stands for Exchange Traded Fund, an investment vehicle that tracks the performance of a particular asset or group of assets. Bitcoin ETFs, then, are a kind of ETF that tracks the performance of Bitcoin, one of the most popular and widely used cryptocurrencies in the world. Think of a Bitcoin ETF as a bridge. On one side, you have the traditional financial market, regulated, familiar, and accessible. On the other side, you have the relatively new and volatile crypto market. A Bitcoin ETF serves as a bridge between these two, allowing investors to gain exposure to Bitcoin without having to deal with the complexities of buying, storing, and managing Bitcoins themselves. Now, how does it work? A Bitcoin ETF operates by purchasing and holding Bitcoins in a trust. The ETF then issues shares that represent a proportional interest in the held Bitcoins. These shares can be bought and sold on traditional stock exchanges, just like shares of a company. The price of a Bitcoin ETF share generally tracks the price of Bitcoin, meaning if Bitcoin's price goes up, so does the price of the ETF share, and vice versa. So, what are the benefits of investing in a Bitcoin ETF over direct Bitcoin investment? Well, firstly, Bitcoin Well, you'll be happy to know that it's not much different from investing in any other ETF. Let's break it down into 3 easy steps. Step 1. Choose a suitable Bitcoin ETF. There are several Bitcoin ETFs available on the market, each with its own unique features. Some are passively managed, meaning they aim to replicate the performance of Bitcoin, while others are actively managed and try to outperform Bitcoin. Look for an ETF that aligns with your investment goals and risk tolerance. Remember, more risk often means more potential for reward, but also more potential for loss. Step 2. Open a brokerage account. You can't buy shares in a Bitcoin ETF without a brokerage account. Luckily, opening one is a straightforward process. You can do it online, often in less than 15 minutes. There are many online brokers to choose from, each with its own set of fees, features, and customer service standards. It's worth shopping around to find one that suits your needs. Some even offer a demo account where you can practice trading before you risk any real money. Step 3. Buy shares of the Bitcoin ETF. Once your brokerage account is set up, you can buy shares in your chosen Bitcoin ETF. It's as simple as searching for the ETF by its ticker symbol, deciding how many shares you want to buy, and clicking buy. But here's a word of caution. Investing in Bitcoin ETFs, like any investment, requires due diligence. You need to research the ETF, understand its investment strategy, and be comfortable with its risk profile. Keep an eye on the news too. The value of Bitcoin, and therefore the value of your Bitcoin ETF, can be influenced by many factors, including regulatory news, technological changes, and market sentiment. So to sum up, choose a Bitcoin ETF that suits your goals, open a brokerage account, and buy shares in the ETF. And don't forget to do your homework. Investing in a Bitcoin ETF is as simple as buying shares in any other ETF. But remember, simple doesn't always mean easy. It requires careful thought, research, and ongoing attention. Let's recap what we've learned today. We started our journey by understanding Bitcoin, the pioneering cryptocurrency that started it all. Bitcoin is a digital or virtual form of currency that uses peer-to-peer technology to operate without any central authority or banks. Its appeal lies in its potential to be a decentralized, anonymous, and globally accepted form of payment. Next, we explored the concept of exchange-traded funds, or ETFs. These are investment funds that are traded on stock exchanges, much like individual stocks. They offer a way for investors to diversify their portfolios without having to buy each individual stock or bond. ETFs allow you to invest in a broad market sector, a specific industry, or even a commodity like gold. Then we dove into the world of Bitcoin ETFs. These are a type of ETF that track the price of Bitcoin. They allow investors to gain exposure to Bitcoin without owning the cryptocurrency themselves. This way, investors can benefit from Bitcoin's price movements without the need to manage digital wallets or navigate cryptocurrency exchanges. We also discussed the benefits of Bitcoin ETFs. They provide a regulated and secure way to invest in Bitcoin. They eliminate the complexities and security risks associated with buying, storing, and selling actual Bitcoins. Plus, they offer the added benefit of liquidity, as they can be easily bought and sold during market hours just like any other ETFs. Finally, we explained how to invest in Bitcoin ETFs. Like traditional ETFs, you can buy Bitcoin ETFs through a brokerage account. You don't need a digital wallet or any knowledge of cryptocurrency exchanges. It's as simple as buying a share of a company on the stock market. Investing in Bitcoin doesn't have to be complicated or risky. With Bitcoin ETFs, you can gain exposure to this digital asset in a regulated and secure manner.